Hi, it's Lee and welcome to the Tesla Economist. If we keep seeing Tesla's stock price dropping, I'm not too phased now, as I feel like I see the real value in this company, by which I mean what the market sees in it. In the past, I've been too focused on fundamentals and more what is quantifiable, rather than trying to place a value on future Tesla or Elon magic, and realized that despite how far away Tesla may be from significantly increasing profits, it's not as important when it comes to the stock price of this company. This is very much a growth company, and like Elon said, the fact they still have positive free cash flow, despite not only such significant capital investments, but also the fact that there is economic uncertainty that is affecting consumer confidence and they are less willing to make large purchases like new cars, and then the fact that interest rates are high and affecting car prices, and the fact that Tesla have still been expanding their supply and demand at high rates relative to the rest of the industry and still able to remain cash flow positive is very impressive. It means Tesla is able to self-fund its massive level of growth. Then there's more than $20 billion cash to help if necessary. Tesla's capex was over $2 billion in Q2. That is an enormous amount to be spending in a quarter. We are approaching an annual capex of around $10 billion. Although in Q4, this will possibly reduce somewhat when the Cybertruck line moves to COGS instead of capex. However, whenever Mexico starts, Nevada expansion, or Megapack factory in Shanghai, we're going to likely be seeing some further increases in capex. In fact, we could possibly even see negative free cash flow at some points, especially if Cybertruck COGS are high to start with. But like we said, we have a large enough buffer to handle all this. Now, $10 billion or even more a year spent on capex is some serious growth. Currently, Tesla has $25 billion in property, plants, and equipment. We're looking at nearly 50% annual increase. This is massive growth. So perhaps this is why we may still end up seeing 50% CAGR at least some years. This future capex is being spent in areas now that Tesla has a better idea that will work and provide a decent return on investment. Tesla has learned so much from everything they've done in the past. Some of their previous expenditure and choices have not been as good as others, but it's a learning experience. Tesla is literally building a new industry. There are no set rules. Tesla is working it out as they go along. And in theory, all the other EV companies should be able to benefit from Tesla's discoveries as they reveal the path as to how the EV industry works. Tesla's current path is to use LFP cells with a new parallel manufacturing process, and have resorted to LFP cells, or perhaps a hybrid version, but are no longer reliant on growth with 4680 cells, which has been some of Tesla's investment that has not worked out to ramp as fast as we hoped or were promised. But this parallel manufacturing line gives us as much hope. And again, it may not work as well as we were promised, at least initially, and might take time to ramp too. But it has insane potential if it truly can get the cost down by as much as half. Then, on top of the capex, we have R&D expenditure, which is mainly going into FSD potential, which can add an absolutely insane value to Tesla's business. Elon's saying the vehicles are worth as much as 5 times. But like I've explained, that would mean that they're closer to 20 times as much profit. But not everyone will want to put their car in the robotaxi network, so perhaps FSD solved makes Tesla's worth twice as much, which is still perhaps 5 times more profitable. Still a big jump. And there is obviously the likelihood that Tesla may just make cars for themselves to place in the robotaxi network. Then all the advances we see in robotics and the fact that Optimus may even be able to do meaningful tasks at the Tesla factories as early as next year. This becomes basically priceless if scalable with, again, the whole infinite demand product. All these amazing facets that Tesla brings to the table that, if any of them hit, make the company worth 2 to 10 times the value it is today. And like we're saying, is that Tesla are spending an absolute fortune on investing in these potential futures. They have incredible engineering talent and a charismatic leader who has every single global connection to the highest levels, all focused on these objectives. These are the stories that is Tesla. These are stories that will become more believable at times and less believable at others. But as they go in and out of popularity, there are still non-stop improvements happening, leaving a base of progress, which gives a more and more solid base to the stock price. FSD was not ready as early as Elon thought, but there is still a definite improvement in its capabilities from those times, as there will be next year, even if it's not solved, and the year after that, each time edging closer to being solved, making it more believable that it will actually happen. This is just the evolution of Tesla's new versions and data collection. On top of that, there is Dojo, that will continue to improve and become more powerful and make step changes in training FSD, along with the likes of NVIDIA evolving in processing power with Moore's Law. I know lots of people like to talk about Wright's Law, popularized by Cathie Wood, but Moore's Law feels more apt when it comes to FSD. Computers are going to continue to become exponentially more powerful. This obviously benefits FSD. All this progression will make noticeable improvements in FSD along the way, making it more believable it can be achieved soon. And as the story becomes more believable, the stock price will strengthen with it. And on top of that, there'll be progress in other areas of AI outside of Tesla, and the market will start to give more credence in how much AI will change the world. And Tesla is a big part of AI. When we see these big jumps in AI, then Tesla's stock price will also benefit, as investors don't want to miss out on the AI rush. It's too late already. The market has revealed its true colours on how it doesn't want to miss out on the potential of Tesla. And this is when it has barely priced in the potential Tesla has when it's producing 5 million Gen 3 vehicles a year that cost half the price to build, maybe achieved in 2026. But either way, big numbers. And as soon as we start seeing Tesla bots working at Fremont or other factories, literally replacing human labour, and Tesla showing how they can actually scale up production of these bots into the millions with a cost of perhaps 10 to 15,000 per bot, then this story is going to be hard to ignore, and not something many investors want to miss out on. Elon is going to keep selling these stories and reinforce the belief that they are going to happen, and over the next few years, invest perhaps something in the region of $50 billion to back it up. This is an insane amount of investment, and a very tangible way to back the fact these are going to happen. They do take time, and over that time, the market will take a fickle view on Tesla. At times when these stories become more believable or show some big jumps in progress, along with other external factors. As they keep progressing though, there is a bigger base that Tesla is laying down. Although these investments may affect profits and free cash flow negatively, the growth can't be stopped when it comes to revenue. As Tesla continues to expand with more products and services, then there'll be more sales reflecting turnover. This is my view on the stock now, and there are always many other events out of the blue that just happen that make investors think that if that can happen, then the rest of what I've just discussed could happen too. And these stories become reality, and they don't want to miss out. For example, OEMs adopting Tesla's FSD, Tesla revealing a Gen 3 model, Tesla breaking ground in Mexico, or launching a refreshed Model 3 with improved specifications that offer even more range and cost less to build. This is the direction the industry is headed, to only further improve efficiencies and reduce costs, with more economies of scale kicking in, and the bandwidth of the EV supply chain expanding. Like I am saying though, it takes time. It takes years to see some of this progress. In the meantime, the stock could do all sorts of things, as we have seen many times in the past. Like we almost just broke 300, but it's taken a bit of a hit now, and we have interest rates rising potentially looming ahead, but then it just takes a little bit of positive news to turn it all around again. Like a confirmed Cybertruck handoff date, perhaps on November 22. I say that date as that was the date of the reveal in 2019. But I think any date confirmed would be good. If the stock drops much more, I think I'll probably even buy some more options with the expiry date around Q4 deliveries, as that should be a good result. Also, don't forget, I'll be on holiday for the next couple of weeks, so I won't be around quite as much. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.